The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Well, welcome to this Friday edition of Squawk Box with Karen Cho, myself, Steve Sedgwick, and these are your headlines. Europe looks set for a positive open on the equity front, but US futures losing ground on a day expected to be dominated by President Trump's announcement of a new Fed chair. Now it appears the former Fed Governor Kevin Warsh reportedly the pick. iPhone sales power a blowout quarter for Apple, but shares struggle to gain ground amid continued questions around the company's demand outlook and AI strategy.
UK Prime Minister Keir Starmer meets business leaders on the final day of his landmark trip to China. As President Trump warns, his engagement with the country is dangerous. And Adidas shares pop over 6% in pre-market after the German sportswear giant reports record annual sales after more than doubling operating profit in the fourth quarter.
Are you following the prediction markets?
Yes, I saw some of them.
The two largest ones, one of which I hasten to add, CNBC US has a relationship, I think it's Kalshi, and Polymarket, seem to have seen some extraordinary trading over the last 24 hours. Now, I'm not saying that there's anything improper going on, but it's extraordinary how all those bets for Rick Reeder have now been replaced by a lot of bets for Kevin Warsh. Who knows something? Well, and I find that quite interesting, and I do hope that the due diligence at the prediction markets about who knows what and who found out what information, I hope that it is very well gone into, because it seems quite extraordinary all of a sudden that it's gone to 93% now, Kevin Warsh.
There was a lot of reporting yesterday about this meeting between Warsh and the president, and
as it was the previous day about Reeder.
Yeah, and the odds swinging behind Warsh. So I think it's the one the market's been waiting for forever. 4 names whittled down potentially to 1. We know that there's a seat that becomes vacant on Saturday. Stephen Myron's seat becomes vacant. That is the avenue for the president to put the next chair in. And it seems as though all odds now are swinging behind Warsh, that he is the man. Don't forget, he wanted lower interest rates. He was always calling for that, but also shrinking the balance sheet of the Fed, which will be interesting if we're talking about slightly tighter monetary policy that comes into the mix here as well.
Shrinking the long end of the balance sheet will be interesting. Maybe we'll come to our next guest about that, especially given concerns about yields at the longer end. US President Donald Trump has said he will name his pick for the next Fed chair this morning, ending a month-long process to find successor to Jay Powell. According to multiple reports now, the White House is preparing to nominate the aforementioned Kevin Warsh as the new central bank chair, with the former Fed governor beating Kevin Hassett, Christopher Waller and Rick Reeder to the role. The president was asked what it was that gave his pick the edge.
I'd rather say it tomorrow, but just an outstanding person, and a person that won't be too surprising to people. A lot of people think that this is somebody that could have been there a few years ago. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
It was a choppy old session for some parts of the market, torn between big name stocks. And don't forget, it was the wash up from tech earnings. We saw plunge in Microsoft stock yesterday. It was the real underperformer for the S&P 500, right at the bottom of the index, pulling it lower, down 12% as the market looked at some of the big investments matched against some disappointment around the cloud revenues and the cloud outlook versus Meta, runaway to the upside, 10% bounce in that stock on the back of its earnings and how it's monetizing AI. So real tug of war around AI stocks. The result, the S&P 500 only slightly lower. The Nasdaq down 0.7%. Of course, Tesla was the other big name in the equation, and that stock also slipping when the market began trading. So it was a bit of a negativity around some of those tech numbers that the market had to see its way through yesterday. In terms of some of the other action we've seen since then, it's been about the dollar. This Kevin Warsh trade that's come in, the dollar has firmed up. It's clawed back some territory against some of the major pairs and crosses. So dollar index this morning is higher by about 1/3%. But the casualty in the equation has been gold, silver, copper. Furious trading has taken place in some of these names since the start of the year, but some profit taking has now entered into the mix, and that has seen a big reversal intraday, at least for gold prices down 4.6%, 7% down for silver on spot prices, and copper slightly more subtle moves, 2.6%. But we were saying anything that goes up that rapidly may come off at some point, and today seems to be the day we've got that reversal taking place. Let's get into futures for the European market. A big day here yesterday, Thursday, Super Thursday on earnings. SAP, one of the big stocks on the move to the downside, impacting the DAX that was down more than 2% by the time it finished up. We are waiting for the trade this morning that suggests that the DAX may recapture at least some of that trade, only about 0.5%, looking positive along with Italian stocks. Elsewhere, slightly more uncertain trade around the FTSE 100 and the French market. Now, US futures as we get going for the Friday session. A quick look after what has been a very big week on earnings. You can see we are called lower across the board.
Let's get to Themistokleos, who is the head the Chief Investment Office, EMEA at UBS GWM. Themis, lovely to see you. You and I managed to get a brief conversation about what an incredible world we are living in at the moment.
Exactly.
We can look at the earnings and the tech companies in a few moments' time, but let's go top down as well. What do you make of what could potentially be the big story of the day? And we'll answer a lot of questions, and that is if Kevin Warsh does become Trump's pick for the next Fed chair.
I'm sure that is going to be an important driver for the market. But I would take a step back and make 2 points. The first one is that the chair is one of the members of the committee. All the decisions are made by the committee. And if you have a chair that is respected, it's more likely that we have a more credible Fed, which gives more confidence to the market in terms of having responsible approach to interest rate setting. And credibility of the Fed is important for the market. So I would say is, first of all, the chair is just one member, so he's not going to influence the decision of the whole of the Fed. And the second one, if you have somebody that is respected, then I think reinforces the credibility of the Fed. The market might sort of take a view that he might be more hawkish than some of the other members or potential candidates. But at the end of the day, the Fed, if you look at the background, the economy is very strong. Inflation is still above target. I don't know how much the Fed can do and keep its credibility in terms of cutting interest rates. Can they cut once, twice? I think anything beyond that would be raising questions about the credibility of the Fed.
We are all in guesswork territory, but let's add a few numbers up and then just see what you think. Let's say Kevin Warsh is the pick. We'll work on that scenario. And let's say that the composition of the Federal Reserve, the committee, remains fairly similar, albeit with a mildly dovish bias perhaps going forward with future picks as well. Do you think the Federal Reserve is going to cut twice in 2026?
Our current view is that they cut once with some probability of a second cut. And that to us makes sense. Going back to what I said earlier on, the economy is very strong, inflation is still sticky, labor market has been weak but stable. So with that background, why would they cut more than once or twice?
Can I pick up on what the backdrop may mean for the markets, though? Because if it is Kevin Warsh, there may be some tightening of the Fed's balance sheet to $6.6 trillion in total assets, as according to the last weekly numbers. If there is balance sheet shrinkage along with slightly less deficit spending this year, what sort of tightening could that bring into the US markets?
I don't think it's going to be that significant. Because, again, it's sort of, if we look at the fiscal spending, it's still very loose, right? We have a lot of tax cuts as a result of the beautiful bill. And with that background, I think the market is still, sort of the background for the economy is still quite positive. I don't think it's going to derail the growth we're expecting. Can it cut 0.1% of the growth? I don't think it's going to be material.
Let's get into some of the numbers then, because the big backdrop for the US economy seems to be this AI investment story. Yeah. To me, it was interesting looking at the Microsoft reaction on markets yesterday. It was everything investors hoped we would not see, that you had still deep investment spending. The numbers on cloud were not as strong as the market had hoped, and effectively about $400 billion in valuation lost around some of the slowdown in the growth for cloud computing Azure. The company's line was that, look, we have some capacity constraints here. that there are issues in terms of meeting some of the demand. Some of the demand was really coming through from OpenAI, a company it's also invested in. Concentration risk, so it ticked a lot of negatives for the market. How are you thinking about getting through some of the challenges in digestion around AI?
Actually, it's interesting to look at Microsoft and Apple and Meta, right? I think the market is becoming a lot more discerning in looking at these companies and looking at company-specific outlooks. And whereas in the past, anything to do with AI rallied. Now the market is looking at the company specifics and differentiating in the performance. That's the one point. The second point is that we need to put it in perspective. These stocks have done extremely well. Expectations are very high. So at some stage, it's a possibility that these expectations are not met, in which case we could see the stocks coming back. And I think we've seen a little bit of that with Microsoft. This circularity of investments is something we're keeping a very close eye on, because it could potentially create problems down the line. At this stage, it's not huge. We don't think it's that significant that it's going to lead to systemic risk within the ecosystem. But clearly, if that grows, that could be a problem down the line.
There seemed to be a down the line story if you extrapolate out from Microsoft, and that was some of the fears that OpenAI might be having challenges, whether it's from Google Gemini, whether it's from Anthropic, whether it's from others. And this is a stock, or this is a company that may come to the markets in 2026 an IPO. If there is posturing, if the market is concerned around the performance of OpenAI and ChatGPT, what do you think it means for repositioning of assets across the AI ecosystem?
It's a very good question, because actually the theme we see for the current year is broadening of the market, and that applies across the board. But starting with AI, we do think that as we go through the year and to next year, we're going to see broadening away from the enablers, the likes of cloud computing, semiconductors, data centers, into the application layer. And the upstream part of AI could become more competitive. So we need to keep an eye on that. But clearly we see more value accretion down in the applications, things like cybersecurity, also robotics and some of the other areas downstream. So it's broadening of the market within AI, but also broadening away from the US equity market into a lot of the other international markets.
Themis, is there excess liquidity in the markets, or actually are the markets in some form of restrictive territory at the moment? I tend to see, from what I'm seeing, it's the former, because when you see these extraordinary moves in some of these asset classes that haven't moved for years and now suddenly moving on fundamentals, apparently, gold and silver and copper, for instance, extraordinary volatility. There was definitely some form of liquidation trade yesterday afternoon where it popped aggressively, then they both fell aggressively as well. Is this a liquidity issue, or is something else going on?
I think, I'm not sure it's a liquidity issue. And again, I think the drivers for the different commodities are different. We've seen some correlation between the commodities. In some ways, the gold price appreciation is being dragging some of the other commodities with it. But if you look at the demand for gold, where is it coming from? Central banks trying to diversify away from US.
Sorry, Themis, they've been doing that for years.
But on top of that, that has been a steady demand from central banks. What we see more recently is ETF demand. Right. And where is that coming from? The need for diversification is also, but also for hedging, given all the geopolitics we see around. And also, if the interest rates are coming down, the cost of holding gold comes down, so that is also helping demand. And the final point is government debt, which is basically a concern for the market. So if you were concerned about the level of debt, you want real assets, where do you go? That's also, I think, supporting gold.
Themis Toklios, thank you very much for joining us, Head Chief Investment Office at EMEA UBS GWM. Well, let's get to more tech numbers, and Apple posting a 16% jump in first quarter revenue, coming in just under $144 billion and topping analyst expectations. This was driven by strong demand for its new iPhone 17 lineup, with smartphone revenue surging 23%. Apple's iPad and services business also saw strong growth, Shares rose more than 3.5% in after-hours trade before paring back those gains. Let's get to Arjun. He joins us with more on the Apple numbers. The demand for the iPhone 17, I think that took the market by surprise, but buried devil in the detail in the commentary was that, look, that memory chip crunch and other supply chain issues are catching up with Apple, and that's going to eat into margins.
Yeah, a couple of things. Look, iPhone 17, I remember being at the Apple store on launch day, and there was a lot of excitement about the device because it was a refreshed design, particularly
so you
for
were the only one there.
No, it was busy the day I went. That was in previous years. It was honestly probably the one of the more...
Why do people queue up anymore? Everyone's sensible, gets it delivered
very
to their
strange.
door.
Yeah, I know. People pre-order these days.
Maybe
But there were a lot of people
Maybe
in the store.
A demand for being with people rather than being on your own getting it
And
home.
it was cold.
Maybe they thought they were getting some AI in the phone this time.
Yeah, maybe they couldn't pre-order, I don't know. But they wanted, it was a busy day. There were a lot of people coming in and out of the store through the day. And I think the refreshed design, particularly on the Pro Max, the new colors, cosmic orange, really sort of struck a nerve with consumers, which was good. And so you are seeing demand for that. And there was a huge amount of people who were on some quite old iPhones, and I think you're seeing some of that pent-up demand come through. But on the supply constraints, that's going to be, I think, a big deal for the market going forward, just to figure out how Apple navigates this. They said a couple of things, not just on memory. They said this is likely going to impact the company, but also they were saying they're having a constraint on the supply of the more advanced chips. So those are the chips that power both the iPhone and its other products like the Mac as well. So supply on those as well. And of course, Apple is one of the biggest buyers of these from TSMC. So they're looking to navigate and looking at how to navigate some of those constraints.
So strategy-wise, Apple relying on some of its own AI, also relying on the likes of Google and some of its technology. I mentioned the margin story. It's got to get through the next 12, 18 months, maybe longer, on this margin story around the memory chip and other issues around components. It has had margin expansion through the services side, which is 26.2% of total sales, margin of 74.4% on gross margin. Does it rely more on services to compensate for the component issue that it's facing?
The services business has been very, very stable, and you've seen it sort of double-digit growth for some time because it's got such a huge base of users, continues to sell its cloud services, and that's really has supported margins a lot. But I think what you are seeing with the latest quarter, with the iPhone 17, there has been a skew towards the Pro and Pro Max models. Those are the much higher priced models as well. And that, I think, has helped support the margin story for Apple. And even with the memory crunch ahead, Apple's still forecasting some pretty strong margins.
I've read some very interesting and some very smart commentary saying, chill about AI. Apple, don't worry about this race going on at the moment. You've got the hardware, you've got the ecosystem, you've got this massive fan base that you just alluded to as well. Let everyone else knock themselves out, spending hundreds of billions of dollars developing a product which will ultimately become commoditized. Apple is the master at second mover advantage. It lets other people come up with stunning technology, then it works out how it can do it better and cheaper as well. Is that what they're doing?
I agree with that because the user base of Apple is so vehemently Apple. And there's not a lot of, I guess, switchers in that Apple fan base. And what you're seeing right now on smartphone AI in particular is you've got Gemini out there, but people are also downloading other apps like ChatGPT and others. In terms of integration, Google has done that well with some of its Android partners like Samsung. You're seeing some features, but I don't think they're sort of make or break right now for people who go out and buy a smartphone. They're not thinking, what AI does this smartphone have? They're looking at the features, and that's why even without sort of some of the more advanced AI features of its competitors, people went out and bought the iPhone. That user base is key. So what Apple's going to do now, I think, is a smart move with Google. Google has shown that it has been one of the leaders when it comes to consumer AI, and particularly on smartphones with the Android user base. It's been working with partners like Samsung, etc., to bring these features to market around AI. And so I think it would do something similar with Apple. And that's going to give it a new feature when it looks to push those who perhaps haven't upgraded on the iPhone 17 to whatever comes next, iPhone 18 and others as well. But yeah, second mover advantage.
Coming up on the show, the AI race to go public. Thank you, by the way. OpenAI reportedly accelerating plans to IPO as soon as this year. We'll discuss what's driving the rush. Plus, Adidas delivers record 2025 sales in its preliminary results. Even as the sportswear giant navigates tariff concerns and a tough retail backdrop, we'll cross live to Annetta in Frankfurt. And we're going to be breaking the full year numbers from the German industrial conglomerate Bosch and hear what the CEO, Stefan Hartung, has to say. The interview coming up 8:45 London time. Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
We were talking a lot about Tesla yesterday, but the story moving along now as Elon Musk is reportedly weighing a potential merger of SpaceX with either Tesla or his AI startup XAI. This according to Bloomberg, which says some investors are pushing Musk to consolidate his companies to help attract larger capital from infrastructure and sovereign wealth funds. OpenAI is reportedly accelerating plans to go public with an IPO targeted for the fourth quarter of this year. That's according to the Wall Street Journal, which says Sam Altman's company is holding informal talks with Wall Street banks and is keen to beat rival Anthropic to become the first major AI player to hit the public markets. Q4 slated as a potential time frame. Of course, that would be likely behind SpaceX. Now, amid the AI boom, hyperscalers and governments are looking for ways to repurpose excess heat from data centres, including heating nearby homes. CNBC's April Roach has been looking into how the facilities are increasingly being integrated with local heating networks and joins us now. April, tell us more.
Morning. Yes, that's right. So I think the real game changer here is AI, because AI workloads are driving massive growth in data center compute, and this technology has existed for quite a while. But it's really as these chips that data centers house are getting hotter and hotter, companies are having to look at new ways and innovations to cool these chips and also maximize efficiency while also not sacrificing their sustainability goals. So one of the ways they're looking at is to repurpose this excess heat from a data center and connect it to a local district heating network and essentially create a kind of circular economy where the byproduct is waste heat, and you're benefiting not just the goals of big tech, but also cities and governments as well.
We've been talking in recent days around putting data centers into space through the lens of SpaceX. And we just read a story on how Elon Musk may try and bankroll the SpaceX endeavors, whether it's an IPO, rolling other endeavors together. When you look at what the industry is doing, tackling every little bit of source around heat and energy efficiency, just contextualize that for us and sort of where space sits versus that.
Yeah, well, I mean, when you look at distance, it's quite the reverse, isn't it? For this kind of technology, you're really looking at the kind of more medium-sized data centers that are located more close to cities and communities, so they can deliver that waste heat. And it's really just trying to take the most out of every resource that you can, really, that the data centers have. That they're not very attractive for a lot of cities and communities in the past. There's a lot of not in my backyard. So this is potentially a way that they could actually benefit from these facilities and potentially even lower consumers' electricity bills.
This is an old idea.
Yeah.
CHP, I was looking at it a long time ago, which is combined heat and power plants as well, which basically do the same thing, but not obviously for AI data centers as well. One of the obstacles is obviously cost and infrastructure.
Yeah.
So it's all very well having this amazing heat source, which will then potentially power homes and power other areas. But who's going to build the infrastructure and who's going to pay the cost of it as well? Because when all these amazing data center constructors and ultimate clients are doing their thing, they're under a lot of pressure cost-wise anyway. Who's going to pay for the links, and making sure that the client is there as well?
That's a really good question. And when you think about, why isn't a data center heating my home right now? That cost is one of the biggest barriers here. There's a lot of high upfront costs, a lot of capex, a lot of retrenching that has to be done to build these networks. And when it comes to who's investing, it has to come from the data center operators and the tech companies.
Did you say there was a case in Dublin?
Yes, there was a case in Dublin. Yeah. So the AWS data center obviously then had to set up that network itself, but also the local government formed its own energy utility company called Heatworks to connect the data center to the district heating network. And then AWS actually provides that recycled heat free of charge. Yes. So when you're looking at the benefit for the government to kind of make that investment, that long-term potential there is there for that heat to be
April,
supplied free of charge.
it sounds fantastic. Can it be done at scale?
That is a really good question again, and I think it's going to take time. I think the technology right now is changing. But traditionally, when you look to why this was done before, a lot of the heat that was being emitted was actually low quality heat, so it couldn't be directly used. But now they're actually able to raise the temperatures of what's being emitted, which is making this more directly usable. But you do need to have governments and all the players involved in that be willing to come together to make this work, as they did in that case in Dublin.
April, fantastic work and such a technical area of the market too, so I appreciate you lending your expertise to that. And for April's full piece, you can find out whether your home could be next to see data center powered heating. Head online to cnbc.com. Can we control AI? That's the focus of the latest episode of CNBC's new podcast, The Tech Download. Arjun spoke with Google DeepMind leaders about safeguards, global regulation, and their relationship with Europe. Here's a preview.
My sense is they are starting to recognize that too much regulation, too much kind of overlapping, conflicting, burdensome provisions that companies have to adhere to is really harmful for competitiveness and innovation. Right. So Mario Draghi wrote this, I think, very compelling report calling out the fact that Europe is falling behind because they have this regulate first kind of mentality. Now I give them credit. The AI Act ended up in a better place than where it started. I think they are receptive to comments from industry. We have a very productive dialogue going with Europe and the European Commission, and we're very actively involved in shaping, for example, the implementation of the code of practice and giving inputs. And of course, they have to balance a lot of stakeholders as well, and that's understandable. But I do hope they are continuing to get the message that European competitiveness for the next generation is at stake.
How do you navigate what appears to be very fast-moving potential changes or investigations, etc., with regulators around the world?
It is a challenging dynamic, right? It is constantly shifting, both in terms of the commercial landscape, the geopolitical landscape, the policy landscape. That's part of what makes what I do very interesting, but it is something that we keep a very close pulse on. I also think at the end of the day, a lot of this is going to be dependent on the business model that emerges, right? What are the incentives that organizations are going to have, and where do those business models lead us to? I think at the end of the day, a lot of this is going to be solved through the normal course of business.
You can watch or listen to the Tech Download wherever you get your podcasts.